What's going on, guys? Welcome back to another video. In today's video we're going to talk about AMC, GME as well as the broader market, and after that we're going to check the options flow for all three of them. So today AMC was down for 3.87% for the day. It had a high of $21.92. The average volume on AMC is around 56.71 million, but today's volume was around 52.14 million. This shows that the retail investors are still interested in buying the stock. Yesterday, the volume went down to almost around 46 million. Today's volume was definitely higher than the yesterday's volume. And these market makers, these short sellers are taking this advantage of the little bit fear that we are having in the market right now. And when we come over to the GME, GME was surprisingly up for 1.99% for the day. It had a high of $159.29. The average volume on GME is around 4.89 million, but today's volume was around 4.06 million. So the volume in GME is definitely keeping up. It's slight bit lower than the average volume just because of the last couple of weeks. We have been experiencing a huge volume coming in GME. The average volume has gone up. Today's volume was a slight bit higher than the average volume that we usually experience in GameStop. Now, when we compare GameStop with AMC, GameStop is doing far more better than AMC right now. It's holding up its price position as compared to AMC. Now let's come over to the SPY. The SPY was down for 1% for the day. It had a high of $448.93. Now tomorrow we are having a big day. Again, a lot of Fed members are going to talk. I personally believe these market makers are doing a little bit of shake off, and then we're going to go up from here onwards. Now let's come over to the options flow for the AMC. Now by looking at the options flow for AMC, I can tell you very clearly the majority of investors are on to the upside as compared to the downside. That's very surprising because last couple of days price action that we have seen in AMC, majority of the investors should be on the downside, but it is completely the opposite. A lot of investors are betting that the AMC is going to go up from here onwards. They are buying pretty heavy contracts, a huge amount of money into these bets, and betting that the AMC is going to go up from here onwards. When I look at the chart, the put to call ratio, call option call side is still way too much heavier as compared to the put side. The volume on the call side is heavier, the premiums are heavier on the call side as compared to the put side, but the rest there was nothing majorly suspicious coming out of the options flow for the AMC. Now when I come over to the options flow for the GME and look exactly what the whales are doing, the majority of the whales are onto the upside. Though there was nothing majorly suspicious coming out of the options flow, when I look at the chart, and a put to call ratio is definitely being dominated by the call side. A lot of individuals are betting that the GME is going to go up from here onwards. The volume on the call side is way too much heavier as compared to the put side. The premium as well on the call side is way too much higher as compared to the put side. It's a complete bullish flow that's coming into the GameStop, and as we know, GameStop is definitely doing far more better as compared to AMC right now. Now when I bring down the premium and see what exactly the retail is doing, the retail is also indicating something similar sort of a pattern. Majority of them are onto the upside. The volume on the call side is definitely higher than the put side. The premium that is being offered more than the put side. As you can see very clearly, there are a lot of call option buying that's happening in the GameStop. A lot of individuals are buying very close expiration date, and they are betting that the GME might go up from here onwards. I personally believe the overall broader market plays a very important role in where the stock is going to go from here onwards. If the SPY keeps going up, then we might experience a little bit more further upside into GameStop as well as AMC. But currently everything is going down, so AMC and GME are both going to get affected. Now let's come over to the options flow for the SPY. Now by looking at the options flow for the SPY, a lot of institutional investors are on to the downside. They are all betting that the SPY is going to go down from here onwards. Now when I increase the premium and see what exactly the whales are doing, so today we had this whale which bought $430 put option that's going to expire in 71 days, and he's buying 17,000 contracts and he's paying $18.8 million for it. This is a very huge amount of money that this individual is betting that the SPY is going to go down from here onwards. Now there were these two bets as well which were a clear-cut indication that the SPY would go down. They might have some sort of information on them, but they canceled their trade at the last moment. Now if we have this kind of a heavy contract, this was a 40,000 contract this individual is buying, and he was buying a $435 put option that's going to expire in 22 days, and he's paying $20 million for it. That was a very clear cut indication that the SPY might keep going down a little bit more further. I personally believe we're going to experience a final shake off, and after that, we're going to have the next leg up. Now, when I bring down the premium and see what exactly the mini whales are doing, majority of them are onto the downside. Now, when I bring the put to call ratio, you can see it for yourself. The call side is very small as compared to the put side. Majority of the investors are onto the downside for the SPY. The volume on the put side is way too much heavier as compared to the call side. The premium that the individuals are getting, the premium are way too much heavier as compared to the call, and majority of the options flow seems to be like onto the downside for the SPY. A lot of individuals are betting a huge amount of money and betting that the SPY is going to go down from here onwards. But I personally believe this will be a final shake off that we're going to have before we have the next leg up. We might experience some sort of a downtrend tomorrow as well. And the rest, there is nothing good news coming out of anywhere right now. There is no ceasefire that's happening in Europe between Russia and Ukraine. There is war still going on, and there will be a big impact on the economy from this war. But there are already a lot of internal problems that's already ramping up in the system right now. First is the inflation, and secondly, we still have the COVID out there. Mortgage rate refinancing demand plunges 14% as interest rates spike higher. Now, this is not a good news for the overall real estate market. I mean, COVID hasn't gone yet completely. We still have a lot of influence all over the world. New variants are being found. I mean, this situation is very critical for the financial market. And this is just a ticking time bomb. When it's going to explode, everything is going to go down along with it. We just have to wait and see how this is going to play out. Hope so. You like my video. Please like and subscribe my channel. And I'm going to see you in the next one. Cheers.